I think it started. You wanna?
No, go ahead.
All right. Hey, everybody. We are back. Scott DiGregorio,
Eduardo Valentine.
Primary Residential Mortgage. We are down in the Naples office.
That's right.
Why the heck did we drive down to your office so much, bro?
Well, I go there every Tuesday. You should come here every Friday.
I suppose that is fair. All right. So what day is today? April
15?
No, 12th. Today's the
I have my
12th.
phone with me. It's weird with the phones thing. Like, I don't use a calendar anymore.
Yes.
This is just for decoration, really. It's true. Like,
Well, I'm old, so I still just naturally go to my watch. But I get where you're
go to
coming
my
from.
phone right away.
I get where you're coming from. So, well, look, let's talk mortgage.
Sure.
I mean, why not? So, look, actually, I'm gonna screw that up. I'm actually not gonna talk mortgage. I want to talk real estate market.
Okay.
All right. There is so much, and I know we talk about this a lot, but I think it's important enough that we can't talk about it almost too much. What the hell's happening with the real estate market?
Well, I'll tell you what the perception is.
Go.
Right? The perception is it makes no sense to buy a house right now. I've heard a lot of people say that because there's the new crash is coming. Like the crash, not a recession,
Not a correction.
slowdown, not a correction. No, like
A catastrophic
collapse of the world economy. It's happening in 6 months to 2 years.
Right.
So it makes no sense to buy a house. A lot of people are saying that. And then...
By the way, that's wrong. We'll elaborate.
Yeah, that's right. And
Don't write that down.
And people are saying too that there's a little bit of speculation about the rates.
Mm-hmm.
Maybe the rates are going to continue to go down, and we're going to go back to a 3%, 2% environment.
Mm-hmm.
And that's it. I hear.
Please be true. Can you please give me 3% rates again, please? I'd love to do a bunch of refis.
I know. And that's it, man. And then and then the people that are buying are very very confused between buying a house that's a resale and buying new construction.
Yeah. So look, there's a lot there. So let me start off talking about why there isn't going to be a crash. I understand where everybody talks about recession. They automatically go to the last recession.
Sure.
Well, the last recession was the worst recession in the history of America. So let's not use that as the standard. Okay, there was another recession around the turn of the century that was a lot more normal.
Right.
And this is going to be more normal. And look, there's one statistic in my mind that validates this. Okay. 60+% of the homes in Southwest Florida are owned free and clear.
64%.
Yeah. End of discussion.
Yeah, it's hard to have a crash when you don't owe money on your home.
No, it's the end of the discussion, right? So if you buy a house for $400,000 and it drops to $350,000 and you don't have a mortgage on it, you just hold on to it.
And you know what too, the consumer is just in a better position to buy a house than it was before. I did a video a while ago on why there won't be a recession, and the numbers are clear. Like, consumers are better prepared. They have more money to put down. They have more savings. They're making more money now.
Listen, you get a mortgage now, you earn it.
That's right.
Okay,
Yeah,
I mean that's just the fact of it.
That's
okay?
true.
Back in 2005, when I was in the business, I believe you're in high school or something, but but look, back in 2005, everybody was getting 100% financing, adjustable rate mortgage, and you literally needed a pulse to get a loan. Okay,
right.
So. It's just a totally different planet, and as a result of that, it can't, 2008 literally, like, numerically can't happen again.
Well, and the numbers are there, right?
100%.
The defaults are extremely low compared to the pre-crash world.
100%. I mean,
So-
and there's no reason to think that changes.
Right. So that's that. And look, it's understandable psychologically. We happen to have one of the worst crashes in America, in the world.
Scary.
So it's understandable that to think that we haven't had even a correction in so long, that we might have something like this is the start of a bubble, or this is a bubble, but it's really not. I think
It's not.
I think the government made things very difficult for people to get a loan enough that it's hard for this to happen.
Look, it's people that get loans now, they have the income to support it, the credit to support it, the down payment in many cases to support it.
Yeah.
It's just not so. Now, can value slip a little bit? Sure.
Okay.
Is a recession going to happen? Guaranteed. The only question is when, not if.
Well, let's talk about that. Let's talk about values for a second.
Okay.
Or let's talk about with all this talk about the recession and about the values and all that, why it's now a good time to buy?
So look, here's where people get screwed up, in my opinion. Okay,
Sure.
There's lots of reasons for home ownership. Okay, hey, your daughter wants to paint their room bright purple. You own the house, go buy paint. You rent a house, you can't. So there's a livability factor to
Sure.
it, okay, which is real.
Sure. There's an ownership component to it too.
100%. Okay.
There's an ownership component on the psychological side as well.
Yes, there is, and there is a potential wealth building thing.
Okay.
But let's strip all of that crap away.
Right.
All that's real, by the way.
Let's strip convenience. Okay. Let's strip the fact
All
that my rent is gonna go up.
Yes.
Let's strip the fact that I want to sell my house, so you have to leave. Right. In the next 60
days,
90 days.
Whether you could afford it or not.
Yeah, no matter what. Let's strip all of that away.
Yeah.
Let's strip the fact of, just
let's
take all of that away. Let's talk numbers.
Yeah, let's just talk numbers. You are going to pay money every month to keep a roof over your head.
Okay.
End of discussion. Okay.
Right.
As somebody once told me years ago, rent is 100% interest.
That's right. Yeah.
And I love that expression because it's really true. Not one penny of your rent goes towards principal.
That's right.
Okay. Whereas on a mortgage, granted on a 30-year mortgage in year one, it's not a large percentage, but it's whatever percentage it is, it's 100% more than rent.
That's right.
A percentage of your money goes towards principal reduction.
And principal reduction, it's a forced savings account.
100%.
It's money that you're putting towards something that you own, towards your asset.
Yes, and that's where, and that's where people I think a lot of times they get screwed up. Like, well, if I buy a house today and for $300,000 and it drops to $290,000 in the next 18 months, I've lost $10,000. Okay, I mean that is one microcosm of truth, but they don't look at the big picture. Okay, what has happened principal reduction during that time, and let's compare that to I've paid rent for 18 months.
That's right.
Okay, and people.
Yeah, because the alternative is renting.
100%.
I mean, there's
but
no
you
other...
could live in a refrigerator box.
Yeah.
Okay, more popular in Brooklyn than down here,
Sure.
but now super low overhead. I mean, that's the thing. Super low overhead. That's not a tip. Yes, that's the cheapest way to do it, but
right.
Let's assume that's not an option.
Right.
You're either going to pay a mortgage or pay rent. You might as well pay rent. And look, you go rent a place. Okay, you need credit. Okay,
yes, you do.
You need. If not first, last in security, at least first in security. So you're parting with several $1,000s.
And with the programs that we have now, and we'll get into that a little later, but with the programs that we have now, I mean, you're at 0% down payment.
Dude, we can make that work. If you're telling me it's going to cost you $4,000 to get into a rental, I could get you into a home for $4,000.
For $4,000, that's right.
So, and you're talking about it's going to cost me $2,000 a month. I could get you into a home for $2,000 a month.
A nice home.
Or whatever the figure is. So,
yeah.
Now I was talking to somebody the other day. They said, well, I'm staying with a friend. My rent is $400 a month.
Okay.
Okay, maybe stay there.
Right. Okay.
You could be in a long-term rental situation for $400 a month. Does it make sense in that scenario to maybe see if values dip over the next 12 months? Maybe.
Sure.
How much? So if you're paying $400 a month, that's a worthy argument.
Or buy the house and have him pay you $400 a month.
It's an angle. So, but for the average person, okay, they're paying $1,500 a month, $2,000 a month, or whatever. You could very often buy a comparable home for less, if not the same.
That's right.
So just monthly payment outlay alone, home ownership makes sense regardless of this crap that goes on with values.
Yes, especially here in Southwest Florida.
100%.
Especially here in Southwest Florida, because as less people buy, there's a lot more people renting, and those rents go up.
Yes, and you got to keep in mind, here's another thing. People buy houses so often looking in this short little window of time, 18 months. Crap, you can own it for 10 years,
right.
15 years. Go back in history, and find me a recession that wasn't followed by a boom, right. Including the one we just came out of. Home values today are equal to, if not higher, than the height of the market.
That's right.
So yes, the houses dropped from $400,000 to 12, but they're back to 400. So if you had a 30-year fixed rate mortgage back then,
right.
And you rode this thing out, the Great Recession wouldn't have hurt you at all. There's examples to that in certain segments of the market, but it's real. So yes, values may dip over the next 6, 12, 18 months, but what are they going to do 12, 24, 36 months after that? And if you're living there with a stable housing payment, who cares?
And it's a stable housing payment.
100%.
Same thing, assuming that it's a 30-year fix, which is what we're recommending for the most part in this
yes.
in this new world, right? you have that security of your payment, and you have the little tax advantages.
Right.
And I'm not even talking about the tax advantage of
the tax
of the tax write-off, because maybe that's not as attractive right now as it was before, but just the homestead exception alone.
Yeah.
Just your actual.
It stabilizes your property taxes. So,
absolutely.
Look, you gotta look at it, and this is why you just need to have your arms wrapped around kind of the whole picture of things. So, anyway, so that's the deal. So, in my personal case, I'm in my house for a long time. I don't really give a crap what the values are in 2020 because I ain't selling.
Sorry.
Just like I don't give a crap what happens to my 401k in 2020 because I don't.
I'm gonna be in my house forever. I'll be probably looking to sell my house in the near future.
Sure.
But same thing, looking back at me being a homeowner, it made a lot more sense for me to buy, because even though appreciation wasn't completely as strong as it was before, the appreciation, that little 3% a year or even 4% a year, was strong enough for me to build some
real equity.
Some real equity there.
Yeah.
When you combine that to me making the payments to the amortization, it just made complete sense. So now I have something that I can take advantage of for my next house.
Yeah, and look, we always run numbers using historical averages because
not anymore though.
True.
We don't. Actually we don't, and I know that you don't do this either, because we're actually showing people, listen, the historical average shows you that appreciation is up here. We want to show you that even if appreciation is down here,
right. Yeah, because right now the projected appreciation is below the historical, but excuse me, we do that because that's what people focus their energy on.
Sure.
But I could contend that's wrong. I could contend that looking over what the average is over the last 30, 40 years actually is the most accurate ways, because over the last 30, 40 years, we've had up cycles, down cycles, flat cycles, whatever cycles, okay, crashes, booms, everything, and all of it levels out to where it is. But because people are fearful, we show them the projected because we want to show them the most conservative approach, and the numbers still 100% of the time make sense.
That's right.
Barring an exception with the guy who pays $400 a month.
And look, and we try to do we try to do a good job when it comes to this. When we actually give people the buy versus rent analysis, we're not only focusing on buying versus renting, but we're also adding all the cost of owning a property.
Yes.
Like utilities and like cost of repair, and like the big one, the 6% that you will probably pay the realtor to sell that house
down the road. Absolutely. And that's the thing. People do rent versus own and they just look at monthly payments, but you and I know that it's just the small that's inaccurate in terms of the benefits of ownership as well as the negatives of home ownership.
That's right.
Okay? You can't have that. You can't have a rent versus own comparison or conversation without talking about repairs. Repairs are real. We were talking before. I got to put a well in my house.
Yeah.
That sucks. It's a check.
Right.
So that is part of the cost of home ownership, and you got to look at that.
Yeah.
Okay. So that's that. So what do you think? Have we beaten that to death?
Look, I think so.
I think so.
I like to think that. I know that a lot of people keep talking about that. And look, if somebody out there is considering buying and it's just scared of what's going to happen in the real estate market, we're happy to have a conversation. We're not just to sell you a mortgage, but really to have the conversation of whether it makes sense in your particular situation to buy a house or not.
Dude, I told the $400 a month guy to rent. Like I don't.
Exactly.
It's cool, man. Look, just because now is a good time to buy does not mean, and please understand this, it does not mean now is a good time to buy for everybody.
Well, we're just talking about that.
Yeah.
Yeah. I mean, flirting with the possibility of buying a new home, might or might not make sense for you.
Look,
right
it just depends, but that's what's going on there. So please don't listen to all the naysayers and the chicken littles out there that the sky is falling. It's going to be fine. We're going to have a little of this crap going on. That's real. Look, we have to have a recession. We've had a boom for a decade.
Yeah, and you can't...
We're overdue.
And like you say, you can't listen to the people that says, listen, there's not going to be any recession for the next 10 years. At the same time, you can't listen to the people that say your house is going to appreciate 10% every year, guaranteed.
Well, what's interesting, I was listening to a podcast recently, and they brought up something that was super sensible to me. The talking heads that people are listening to now on TV are the same talking heads
That's right.
that in 2005 were telling people the housing market is completely stable, you have nothing to worry about.
Right.
Okay? They're not experts in what they're talking about. Just like I cannot speak at the level of what my brother can as far as what's going to happen with the stock market.
Right.
That's his world.
I can probably speak more intelligently about the stock market than my brother.
Right. But everybody has to stay within their realm of expertise,
absolutely.
man. So, anyway, so look, so that's that. So, let's talk about the other thing that's super exciting right now is the nonstop changes in the mortgage industry. The market is really opening up, and I know there were 2 agency changes this week that we've adopted. Not everybody has, that I think are exciting, right? And to me, this is further evidence that the mortgage industry is continuing to expand. And so here's the 2 changes. Number 1, okay, you can now buy a home as a second home / vacation property and rent it out part of the year.
Okay. The question is, why is that exciting?
Okay.
Why do I care? What's the difference between me buying a house as an investment property? What's the difference between me buying a house as a second home? And before this change, what was an investment property?
Right.
So if I call you and I tell you, hey, Scott, I'm interested in buying a house in Florida. And,
you live up north.
I live up north. It's going to be a vacation home. I'm going to be there, 2-3 months out of the year. And other than that, it's going to be a seasonal rental.
Right.
Would that be...
So yesterday that was a problem. Today it's not.
Today it's not a problem.
Okay.
Right?
So look, if you're buying an investment property, your down payment's higher, at least 15%, realistically 20, but at least 15.
Compared to 10% for a second home.
Yes. And let's talk interest rate, man.
Yeah.
The interest rate, especially with 15% down, you could pay...
And 20%. I'm sorry. Unless you're going to 25 or 30%, the interest rate is going to be ugly.
Yeah, so look, you might be looking at 0.25% more. You might be looking at 0.75% more.
Yeah.
So if the market's 4.5, you might be looking at on a second home. You might be looking at 5.25. That makes a difference. But so, look, this is before your day, but before the crash, okay, the mortgage industry's definition of a second home was you had to occupy the property at least 14 days a year. After the crash,
14 days,
14 days,
weeks,
which matches the IRS. That actually matches IRS regulations. If you look at the guidelines after the crash, okay, occupancy fraud was one of the major leading contributing factors. So they said if you rent the property out technically for 1 day, it's considered an investment property. So what happened was people would start lying, which we have a term for.
Sure.
It's called mortgage fraud. Okay, mortgage fraud, 30 years in prison. Up to a $1 million fine. Okay, and here's
Big
the thing.
FBI thing.
Yeah. So, but here's the thing. So, when we would hear that, hey, listen, I'm going to use this as a season, we would steer people towards investment property.
We had to,
because that is the legitimate legal way to do it. Did everybody do that?
Because no. But, people like you and I would care about our license.
I care about a license. I care about my customers.
That's right.
Okay. Ignorance is no excuse for breaking the damn law.
That's right.
There were people that broke the law unknowingly. 1 out of 3 to 1 out of 4 mortgages are audited nowadays. So you have between the 20. But dude, that's real. Okay,
Yeah.
So all right, so look, so that's the deal. So what does this mean now? You can kind of have your cake and eat it too.
Sure.
If you're going to use it as a second home and occasionally rent it, we could give you the lower down payment and the lower interest rate, and that is big.
Now, on the flip side, the advantage of doing it as an investment property, because there is an advantage of doing it as an investment property, is that to qualify you, we can use a portion of that projected rental income.
Absolutely.
And that's big too. A lot of people maybe, they were tied in purchasing that other home, and if it's really an investment property, we use 75% of the projected rental income. And what's cool about this is that the house doesn't have to be rented at the moment of purchase.
Exactly.
Like it can be a house that's vacant.
Right. And the projected, and by the way, even if it's rented super low, we go off of the appraised value, the appraisal's market rent analysis. So that's a big thing. And the second change that happened has to do with us self-employed borrowers. And look, I don't know about you. This time of the year, I am bombarded with people. Hey,
taxes.
Hey, Scott, I'm filing my taxes. I don't want how I file them to screw up my ability to qualify. Because look, you're living with that decision for 2 years.
Yeah,
fact.
Right.
Okay, so how do I structure my taxes? Okay, is it sensible to maybe not be super aggressive with my write-off so I qualify for more? The way it used to be, in order to use the 2018 taxes to qualify, you'd have to file your taxes and then wait for the IRS to process them and produce a transcript, which could take
weeks. It takes weeks.
Crap, it could take 3 months.
Yeah.
Okay. So if you wanted to file your 2018 taxes today, we're talking to people about 60, 90 days to close. But now, as long as we have proof they were filed, and if you owed money, proof that you worked that out with the IRS one way or another, we could use those taxes immediately.
Yeah,
and
which is very exciting.
Dude, that's big, man. That opens up, that changes timelines and opens up loan opportunities for people. So, so that's big. And speaking of that, man, and this is just a word of advice to everybody. If you've been turned down for a mortgage in the last 6, 12, 24 months, for crying out loud, reach out to us, man, because the program offering that we have today is, dude, night and day difference from 12, 24 months ago.
Yeah, they've been...
I mean, crap, literally 3 months ago was a different animal.
Come on,
the 101 program.
2 weeks ago.
Yeah.
I mean, and we've been very focused on talking about these programs, and it's simply because I can think of a bunch of people that we have declined because 100%. We didn't have these programs before,
and now they do,
and now they're able to qualify, and rightly so. Like you're saying, we have the 101 program. People that don't have the down payment, but everything else looks
and
good.
they have decent credit, and now we can get them a super competitive loan.
We have an FHA with a down payment assistance program as well.
With a super low competitive rate, way better than the bond program and some of the other programs out there.
Even for low credit people that have below 600, around that 580, we've loosened up the guidelines to a point where even if we're pushing that debt to income ratio, we can do it where before we had hard stops.
Not to mention our portfolio product, which goes down to a 500 credit score. Now look, you may be paying 7, 8, 9% rate, which sucks compared to market rates. But I was just talking to somebody yesterday. Okay. Get him in the mortgage. There's no prepayment penalty.
I'm doing one now.
Yeah, he's going to get his world in order in 12 months. In 12 months, we'll refinance him out of that mortgage, okay? And again, saves himself 12 months of rent payments and everything else.
Secures the house.
Case by case, the numbers may not make sense, but the point is, it's a conversation we can have today that we couldn't have yesterday.
And the DACA program.
Yeah, dude.
Now we're doing loans for DACA, for people that are on their DACA, which is exciting. There's so much stuff. We have bank statement loans for a lot. Same thing, going back to the self-employed people. These are people that other than what they show of income, what they show in paper, they are very qualified.
Dude, the investor deal, where you just go off of the cash flow of the property. Yeah. So look, if you've been turned down and you're feeling discouraged, do me a favor, reach out to us, DM us, whatever, and let us know what's going on, because I can't tell you. I mean, it is more and more common now when I'm sitting down telling somebody we have options, and in the back of my mind, I'm thinking to myself, man, I'm glad they didn't call me 2 weeks ago. Man, I'm glad they didn't call me 2 months ago.
Well, and it's just, there's so many loans out there and so many possibilities, and I end up closing loans for a lot of people that the first conversation I have with them is, listen, my realtor told me to call you, but there's no way you're going to get me in a home.
Yep.
And I'm like, okay. And there's actually a program for them.
Yeah, very often is. And if not, okay, there was somebody else I met with this week. Hey, here's a game plan. Let's get you into a house in 6 months.
That's right.
I mean, but let's work together as a team on it. So, and then the other kind of thing that we talked about was not giving up on this, right? So
yeah, well, a couple things, right? When it comes to that, people are very. There's one portion of the population that says, you know what, I didn't qualify because my credit is not good, or I didn't qualify because I didn't show income and I'm self-employed or whatever, so I'm not going to qualify anymore. And they don't want to meet with us. They don't want to set up a plan that, in as little as a year, max 2 years, let's say, they can get into the house that they want.
Dude, not to mention, what about the damn people that are qualified that we send out shopping that end up not buying a house because this isn't perfect, or that isn't perfect, or this isn't perfect? And look, man, I'm sorry. It goes back to this keeping up with the Joneses crap.
Yeah.
Okay? Listen, everybody listen to me. We look at the Joneses financials all the time. They're freaking broke, okay?
Yeah,
you don't want to keep up with the Joneses, man. I am sorry. Look, I at one point owned a little duplex. The mortgage payment, I paid $141 for it, okay? The mortgage payment was $1,100 a month. I rented out the other side for $7. My house payment was $400 a month. At that stage of my life, that's what I could afford.
Yeah.
All right, it was a little 1-bedroom. Okay, I rented out the bigger side. I just had my little girl who is getting her license on Wednesday now. So, but at that stage of my life, it worked. But you sold that house, you made money, you flipped, you rolled it into the next one, into the next one, into the next one, and now into a home that I'm going to be at for the rest of my life.
Right.
I promise you, if I tried renting up until I bought my dream home, I promise you I don't own my dream home.
That's right.
Okay, so
Absolutely.
please understand the big picture of things and stop trying to keep up with the Joneses.
Yeah, and keep things into perspective when you buy a house, man. You gotta, and it's hard because it's a very emotional transaction, but you have to keep in mind the big picture.
Yes.
Right? The fact that, there might be a little problem with the AC or things like that. Listen, let's try to negotiate as much as we can.
Yeah.
Let's try to get as much as we can, but we need to understand that it's not worth renting forever because of $1,500 problem with the AC.
It's not,
or
man.
the paint doesn't match.
Look, and like you said, when people get into these situations, man, it's ego. Okay, this is a financial decision.
It
okay?
is.
And look, I say it a lot. Okay, I get people mortgages, but I try to be the voice of reason in the transaction. Okay,
Right.
We talk people off the cliff every time. I was on the phone with a seller yesterday. Weird little thing. Closing got delayed a couple days. The poor seller had gotten burned once before, like a bad scenario. So she was super nervous. I got on the phone with her, explained everything. She was like, "Oh, I feel so much better."
Sure.
That's a cool phone call to have.
Sure.
So look, don't give up if you have to compromise. Be super clear on needs and
Versus
wants.
yeah.
Okay, and too many people put too many needs in the or too many wants in the needs list.
That's right.
All right, the needs list is small, man. You need a house that doesn't need a ton of repairs. You need a safe house. Blah 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 blah. You don't need 5 bedrooms and 3,800 square feet 99% of the times.
That's right. So look, there's a lot of programs out there. If you haven't been qualified, don't give up. If you haven't been qualified before, because you might be able to get a home right now. And if you have been qualified and you're wasting your money in rent, and a lot of these people know that they're wasting their money, they know that it's a bad financial decision to continue to rent for $1,800, but just because they haven't found that perfect home, they don't want to make that leap and grow financially.
Yeah, and look, man, I'm sorry. It's so much of it comes down to just lack of education.
Sure.
Look, it's so interesting to me. We live in the information age, okay? Fear often comes from lack of knowledge. Okay, do yourselves a favor, get knowledgeable, Google it, YouTube it, talk to us. Like there's no,
not like we charge.
Go to my video library. Go to FloridaMortgageExpert.com. Okay, my video library has a ton of videos on FHA and VA and condos and non-conforming and first-time home buyers, and I think I'm up to 40, 50 videos now.
Yeah, or if you want to see somebody better looking doing that, you can go to my video library.
Yeah, I mean, look. Do you want knowledge or good looks? I mean, it's really up to you. But look, my point is this. Go get educated so you can make informed decisions. There's a great book out there called The Wealthy Barber. Silly book, super quick, easy read. Just get knowledgeable about financials because people aren't.
Absolutely.
In all socioeconomic classes.
Yeah.
All right, so that's the deal with that, man.
That's it.
What else you got?
Nothing. I just want to look. Just to close on this, or I'm sorry, just another topic. It's the hottest loan that I've been doing out there right now. It's the 97% conventional loan.
Yeah.
I just wanna
with the reduced mortgage insurance.
Yeah,
and the
I
rates.
just want to make sure people understand kind of how it works. I know there's some realtors watching this, and look, there's a lot of people that don't want to get FHA. There's a lot of sellers that, because of ignorance, they don't want to accept FHA offers. There's a lot of people that only qualify or that don't have the down payment for a conventional loan but want to get into a condo. And this program it's really good. I really like it. And I'm closing a bunch of these loans, and I think it's one of the better loans out there. It's 3% down payment. You have a discount on the mortgage insurance. You have a discount on the rate. And if you do it with us and we put you in the right mortgage insurance, you're gonna have that insurance that if you lose your job, then the mortgage insurance pays for the mortgage
you
for
don't,
6 months.
we don't even talk about that enough.
come
That
on.
you have mortgage payments,
Up to 6
insurance
months.
built in.
And it doesn't have to be consecutive. Like, you can use 3 months in year 1 and the other 3 months in year 10.
Yeah.
Like, that's, I mean, I'm sorry. That's such a good product.
It's,
now, we have no down payment and all that, but if you don't mind putting the down payment, that's such an amazing product that's
it is,
available.
and it's going to get you the lowest monthly payments. Very often lower than FHA. Very, very often.
Very, very often. I mean, it's just a matter of if your credit score it's a tad better, you're gonna have like real savings.
Yeah. So look, do us a favor if you're watching. Would you smash that like button and follow us, please?
Yes.
We want to keep sending out good information. We're both producing our video library. I'm at FloridaMortgageExpert.com. You're on YouTube.
Yeah, I mean, I'm your favorite mortgage guy.
And we're going to continue doing that. Please keep sending us questions. We had no questions.
Your favorite lender, sorry.
We got no questions, so before this, I may cry if we don't. So please don't make me cry. Don't make a grown man cry. And
look, if you're not interested in buying a house, but you know somebody that is, just share it with them.
Yeah, absolutely. So look, that's what we got for you, man. We'll catch you next week, and take care, everybody.
Take care, guys.
Bye.